One of my biggest mistakes has been hiring too slow, waiting for the perfect person. And I knew if I wanted to start something, it would be in this space. You're not going to be like changing button colors or whatever. You got to take big swings and you got to rely on your intuition and not data early on.
Welcome to Trailblazers, the podcast where we sit down with contrarian tech leaders who found conventional success in unconventional ways. Today on the show, I am so thrilled to be joined by Ankur Nagpal. Ankur is a serial entrepreneur, investor, and the founder of Carry, a modern platform helping business owners build durable wealth through smarter tech strategies and long-term financial systems. He's also the founder of Vibe Capital, a $100 million venture fund backing bold founders across the US, India, and beyond, and the creator of Silly Money, a fast-growing newsletter and community helping people beat the game of capitalism. Before that, Ankur founded Teachable, the groundbreaking platform that empowered over 100,000 creators to turn their expertise into income, helping them earn over $1 billion and scaling Teachable to $60 million in ARR before its 9-figure exit to Hotmart. Ankur is passionate about helping founders and entrepreneurs not just make money, but keep it, which is what we're going to talk about today, through the right systems, strategy, and mindset for long-term freedom. Let's welcome Ankur.
Yeah, I'm excited to be there. Is that a ChatGPT bio? It's very good.
I know. Imagine.
Yeah.
You've done a lot of things.
Yeah.
I'm excited to get into it. So before we get into the meat of our interview, we do typically start with more of an icebreaker question, okay? We're going to get right to the heart of it. So we like to talk about hard paths here on the podcast. And you can answer this in a personal way or professional way, but what has been the very hardest part of your whole journey so far? The part that almost broke you?
I will caveat with I feel like I've been substantially more privileged than most people. So, world's smallest violin kind of situation.
Yeah.
But I do think something that defined me was, frankly, moving to this country. Like, my life would have taken a completely different trajectory if I'd stayed back. Like, I'm originally from India. I grew up in Oman in the Middle East. But I think moving to America, which I did when I was 17, did not really know anyone here, came here for college, that sort of defined the rest of my life in a way that the parallel life would have looked very different. Like, I could not have done all these things you listed. Would be very, very hard, if not impossible, to do anywhere else.
It's the American dream.
Yeah,
absolutely. You're like living proof. When did you go from India to Oman, and why did you make that original move?
So basically lived in Oman my entire life. My parents wanted me to be born in India. So I was born in India and we're fully Indian by ethnicity, but my entire life was Oman, age like 0 to 17. So it was a very third culture where, I'm Indian, but I've never lived in India, so I don't fully identify there. I grew up in Oman, but the Middle East, you're never truly from there, right? You're always an expat. At this point, I probably identify American more than anything, but it's still different. I'm still, moved here basically as an adult.
Yeah, and I don't know as much about Oman as I should. Can you tell me more about growing up there? I mean, I know the culture of the Middle East more broadly, so I'm just making assumptions, but tell me more about growing up in Oman. What's the culture like? Did you like it? You obviously got a great education.
It's a bubble in a way that's very safe. When people think Middle East, they think of a very different side of the Middle East. Oman is, beautiful country, incredible outdoors, very peaceful. People are really nice, but it's a bubble, right? You live in gated communities, or I spend most of my time, going to Indian schools, being around other expats. It's a fantastic life. Like, I go back every December and I'm grateful to that country as well. But in a lot of ways, it's not the real world. Like, the government subsidizes everything. There are no taxes in the country.
Whoa.
It's a very different world out there.
How does that work? How do you live so well with the government subsidizing everything?
Again, it's a small country. It has a lot of oil money. So as a result, the roads are very clean. Infrastructure.
That's classic Middle East in that
Correct.
sense.
Yeah, infrastructure works. The part that is a little different from what people expect of the Middle East is it's a very chill, peaceful culture. It's very tolerant relative to the Middle East. The government gave land to build a church, to build a temple. So it's more tolerant than what people think of as the Middle East. At the same time, it never did what Dubai and Qatar did, where the tallest building in Oman is still 12 stories high. So it's a very different world out there.
I love it. It's kind of like the best of it all, though, it sounds like.
Absolutely. I think I tell a lot of people, if you're going to the Middle East, skip Dubai, come to Oman. The beaches are fantastic. The mountains are great. It's a great outdoor destination.
I love it. You should be a walking advertisement for Oman, because I will say I don't meet many people from there, but now I'm going to go.
Yeah, you absolutely should.
I love it. And what did your parents do? What was their background?
So my parents, again, they're both Indian. My dad got his MBA. And at the time, which was the early 80s, Oman had a ruler that wanted to industrialize and kind of bring the country forward really fast. So if you graduated from India, you probably would make 20% more money by coming to the Middle East. So my dad did that and just kind of went up the management path. My mom worked for British Airways growing up, which was awesome since we traveled the world basically for free for, almost 20 years.
So epic. I've always been so jealous of the people whose parents like either work for airlines or they're like flight attendants. I'm like, the free flights.
It was incredible. It was very high variance because you would go to the airport and you're like, anything could happen. I could not get on a plane because they're all full. I could fly first class, or I could just get some kind of outcome in the middle. So you had to be very outcome independent. Like anything could happen, basically.
That's so fun, though, or like you could go anywhere because like there might be, seats open to like the Bahamas. Yeah. There also might be seats open to like Iceland. Like pack for anything. Yeah. Very cool. Okay, so you get to America for college, and from what I know, you were a big like tinkerer. You were like a business builder, app builder very early. Were you like that even before college? Like, how did you learn about making money online?
My first experience making money online was probably my freshman summer. Prior to
college?
Yeah. Prior to that, I always wanted to do stuff. But again, Oman is such a small environment. Like, kids don't work there. There was no way of actually starting a business or doing anything. But my first experience with that is my freshman summer. I had an internship at Amazon in Seattle. It was not very fun. But as a result, I had free time on the evenings and eventually even during work hours, where it coincided with the launch of the Facebook platform, where you could build little Facebook apps and games. And by the end of that summer, I got to a point of making $10-20 a day. But it was the most life-changing $10 or $20 a day because you realize I can do stuff on the internet and make money. Why ever do anything else ever again?
It's the absolute best.
Yeah.
It's so freeing also because you realize it's compounding while you sleep. Like, I feel like that's the major unlock. Like, yeah, it's $10 to $20 a day, but some of that money is being made when you're in the middle of the night asleep.
And prior to that, like, I got a campus job and, it's kind of painful. You feel like you're trading time for money. Here I'm just like building stuff on my laptop and earning. It was just completely liberating.
Yeah, I feel like a lot of people in college had that experience where they're like finally on their own. They want concert money or like, restaurant money. And so they're like, let me just tinker. And then when it works, it's life-changing.
For me, the most life-changing part is as it scaled up and I realized I could pay for part of college, I no longer felt guilty about not going to class. So it actually allowed me to not go to class. At first, I felt very bad not going to class because it's like my parents have saved all this money for so long. It's so irresponsible. But if I'm paying for it, fuck it, I don't have to go to class anymore.
Honestly, it's like a very valid rationale. So if anyone's listening and they keep skipping class, just make enough money to cover it and you'll be fine.
And then it's fine, yeah.
That's hilarious. Did you tell them that you were like making all this extra money and were you trying to supplement school, or was it more just like your own head, your rationale?
I told them that, and initially they thought I was putting pressure on myself. They were like, no, focus on school. But then as it kind of scaled up, I think by the end of the next full semester, I made $100,000 and they were like, this is a lot of money. That's when it still was a battle for them to allow me to pay for college myself, since they thought it was their duty. But as soon as that switch sort of flipped, they're like, fine, we trust your judgment. Go and kind of do what you want.
I love that. And I feel like $100,000 is no joke. Like, a lot of people make things and they really, it's like they break even.
Yeah, this would have been right before my 19th birthday. So I started college. So it was...
So what was the $100,000? Where did it come from? Was there a specific game that did really well?
It was all of these Facebook apps, but at the time what really took off were personality quizzes. It's very stupid, but people would answer a bunch of questions.
I remember them.
Yeah. And then find out which friend's character they are, or It
was like the BuzzFeed quizzes.
Where
you like go through
prior to BuzzFeed, yeah.
But it's the same concept where like you fill out 10 questions, it's like, which Harry Potter house are you?
Exactly.
That kind of thing.
And there was a big vanity aspect because at the time you had your feed. So people would take these quizzes over and over until they got the result they wanted, and they would share that to their feed. It was less self-discovery. It was more like wanting to project this image of yourself, this idealized version of who you are.
That's still how it all is on the internet. Like, I was saying something the other day about how, all these like healthcare businesses are putting like, this is like my biological age, but this is like my actual age. And they're like, exactly. I'm just so much younger.
They're all vanity-based. Yeah.
They're like, I'm fit, I'm healthy, I'm 10 years younger than my age.
With that said, it was hilarious. I actually met someone, first time ever, who was biological age like 6 years older, and that can't be a good feeling.
So the other thing I saw was someone posted it was not accurate. They made it themselves, but that they were like 64 years older, and it said they were like 99. Yeah. And the Whoop founder was like, this is literally not possible. Like you cannot get this outcome.
Yeah,
I thought that was so good. Okay, so Facebook apps, you're having fun, you're making good money. What did you put that money towards? Did you spend it on yourself? Did you actually spend it on college, like your final few years?
I paid for the rest of college myself, but I was still pretty responsible. I will also argue, and this kind of ties to what I'm doing now, I knew nothing about money. Like I eventually paid taxes at the highest marginal rate. I didn't know how to invest it, so most of it just sat. Eventually, I put it all in cash in a single apartment in San Francisco. A lot of financial decisions that in retrospect were someone who clearly did not know what to do with it. But I did not sadly have any like crazy fun purchases or anything. I didn't go crazy and buy anything super fun.
Yeah, but then you would have no money left. Like that's what people forget. You buy the thing and then there's nothing more to buy. When was like your financial independence awakening or like financial education awakening? Because that's something that is such a big part of your identity now, I imagine personally, but definitely work-wise.
Super late. Like after building and fully selling Teachable, only in the last 3 years have I kind of learned anything. And a lot of the financial education I do now is my own journey learning stuff and then sharing it along the way versus knowing anything myself. Like this is an aspect of my life I pretty much ignored until my 30s.
It's wild. I feel like a lot of times too in life, you have to really like be in that situation yourself to start exploring and teaching yourself. Are there any like, other than your newsletter, and we'll get into all that, are there any like books or people that you listened to when you were in the process of building your career and building your, financial streams that you recommend other people look into?
So as a startup founder, I actually stand by what I did, where when I was running Teachable, I ignored this entire side of my life because I realized that the success of this company would be such a big difference that it didn't really matter if I set up my retirement accounts correctly or if I saved like an extra 5%. If this company was successful, that would be a very large outcome. If it wasn't, it wouldn't. So I really focused on that. But as I came out of that, I really liked Ramit Sethi's book, I Will Teach You to Be Rich. It was a very good 101 on how the entire industry works. So that was very helpful. And beyond that, I think just tinkering and like being curious about this stuff has helped quite a bit.
Absolutely. Do you think that mindset of I'll figure it out if this works, because if it's so big, it's really big, and if it doesn't, whatever, like I kind of screwed myself, but it is what it is that the right mindset to have for first-time founders, or do you feel like they should go about it differently?
I think that's the right mindset to have if you are a venture-backed startup founder. I don't think it's the right mindset for 95% of people, 99% of people. But if you're the sort of person who's trading your 20s to try and build a venture-backed startup, I think that is the right mindset. However, if you do that, I think there's a few very important things you should understand, like specifically how to incorporate your company, how to set your business up for QSBS, and other very tactical things that could end up making a difference of tens of millions of dollars. So that's very important. But other stuff about like what percentage of your salary to save, I think that's kind of irrelevant as an early stage startup founder, since you really should not be saving that much or getting wealthy of the salary you're paying yourself, right? So yeah, it's less relevant.
Absolutely. I think whatever salary you have is just break even and sort of like take it day by day.
It's like you want to not struggle or suffer in your life so you can focus on your business, but not much more than that.
Totally. So let's say someone is like, okay, I'm not building a venture-backed startup, but I want to build this great business, but I want to do it the right way. I want to figure out QSBS, which I think is a very intimidating phrase. People see any acronym for the most part, and they're like, whoa, that's a lot.
It's not just QSBS. One of the most interesting things I've found building this company is when we talk about money, there's so much feeling involved. Feeling can be stress, can be anxiety, can be fear. A lot of people hear this stuff and you want to sort of avoid it because you associate it with difficult emotions. So I think kind of breaking past that is also quite important, of like taking a step back and breaking it into smaller pieces just so you realize that you can take action. But when it comes to people figuring it out, I think the most important things fundamentally for people when it comes to money is, one, you may think keeping money in your bank account is very safe, but on a long-term time horizon, that's actually very risky to not invest it. So just setting up something simple that automatically invests it every month will already put you ahead of 95% of people.
Yeah, I think what's really unfortunate is there is a lot of people trying to teach about financial education, but understanding the delta between leaving your money in a checking account versus putting it even in just index funds. Whenever people see those charts, and I'm speaking for literally close friends and family who I've said, like, let me help you, it's very easy, they scroll past it. So, like, how do you get people to sit and pay attention when they are so uncomfortable with it? Because the ones, like, I feel relatively comfortable talking about money, and so I enjoy those charts and stuff, but the people that I know and love are like, oh, I don't even look at that, because it gives them so much anxiety. So how do you get past that?
It's tough because I would say I was that person, right? I made all that money before I was 21. I didn't invest it and index the market. Like, these are all sort of hard-won lessons that I've had myself, where I look at what it could have been had I done that. But I think the best way of going about stuff like that is trying to get people to somewhat systematize it. Like, if you, as an example, set up a recurring transaction to an index fund, that you can kind of set that and forget that. So I find automation to be helpful if possible. But there's some element of, like, people have to want it. It's very, very difficult to make people want something that they don't want to do.
Yeah.
So that is a challenge. I think with friends and family members, I think you can kind of take a bit of ownership. But beyond that, I don't know whether it's something we do in schools or whatever, but people have to want to do this. Otherwise, it gets very hard.
Yeah. It's I think that's a good lesson for life.
Yeah.
You know, it's like, I'm thinking about, like, when someone's dating the person you don't think they should date, like, they're going to date them until they don't want to date them.
Exactly.
So we talked a little bit about, in college, you were making money selling these, or building these apps and games. But then you had this really big exit. Let's maybe flash forward like 10 years later.
Yep.
Talk to me about, like, how that exit came to be and sort of your financial situation afterwards. And I have questions about that, but maybe give everyone that context for those who don't know.
Yeah, absolutely. So for the basically 10 years in between. So built these apps, graduated college at 20, did this till 21. Then I sold my company Teachable at 31. So there's a 10-year sort of gap in between.
I got it right. It was 10 years.
Exactly 10 years.
Yeah.
It was a few months after my 31st birthday. But the time in between, I basically didn't think about making money. I was just building my business. I net probably did not grow my net worth by anything, maybe even went down a bit, since I was paying myself enough in New York to kind of live my life.
What number do you think that is?
So I've shared that publicly. So when I started, it was $70K a year. By the end, it was $150K a year, and it was 70, 105, 120, 150. And these numbers, I will caveat, were for me initially as a 24-year-old, then a 31-year-old. No dependents, pretty good life, pretty comfortable life, but, like, I didn't have kids, I wasn't married or anything.
Yeah.
The numbers, and there's an inflation factor, so now I would, add inflation, but I think that's generally gives you a decent enough life.
Yeah, and I think that's the trick too that a lot of people don't talk about. It's not like you should be, like, paycheck to paycheck. Like, be comfortable, be okay, feel like you can fly to the wedding, feel like you can buy the clothes, and don't be too tight if you didn't have that.
I think that's, the number varies by person, but I think you should be able to not be stressed about money so you can focus on your business.
Yes. Okay, so keep going. So you sell Teachable right after your 31st birthday.
Yep.
Talk about, like, how much, because I think I mentioned it a little in the bio. How much money was it, and where did you put it?
Yeah, so it was a healthy 9-figure exit. It was a life-changing amount of money where I look at that and I'm like, if I never made another dollar for the rest of my life, this is more than I would know what to do with. At the time, it was interesting. Right around the time you're selling your company, it's like a notification goes off in every single private bank. You look at your inbox and you're getting hit up by the Goldman Sachs, Morgan Stanley, JP Morgan, everyone and their friend is trying to help you invest. And it was an interesting process for me because on the one hand, I did not know much about how to invest my money. But at this point, I was also kind of curious to figure it out. So what I did is I took roughly half of what I made and I gave it to Goldman Sachs. I'm like, go do your thing. I'll kind of learn and see what you're doing. And the other half, I'm like, let me kind of have fun with it and invest it the way I want.
And see if you can outperform them.
See if I can outperform them, which realistically...
Fun game.
Realistically ended up in me probably over-allocating into crazy stuff. Like, I think 30-40% of my net worth is in VC right now, which probably doesn't make a lot of sense.
As like a GP commit into the fund or like other VC stuff?
Mostly as a GP. I have 2 big funds where I was 30-40% of the fund myself. And then I LP'd into a lot of funds in a very concentrated period of time.
bull market, I would imagine.
Yeah, exactly.
Classic.
Yeah, 2021. What
Yeah.
a time.
Yeah, and I'll probably like really inflated seed rounds or something.
Yeah.
Got it. Okay, so just as an aside, why Goldman versus the others?
They were all relatively comparable, to be quite honest. So then it came down to the individual, and I liked the Goldman guy who was pitching me maybe 20% more than the others.
Okay, this is, I feel like, a great rule of thumb for business. You end up, most things are quite comparable. You pick the person you like.
Exactly.
Would you agree that that's generally...
Totally. I literally couldn't choose between Goldman Sachs and Morgan Stanley beyond the person. JP Morgan had a good private bank. I used them for private banking. All the others were a notch worse, but between the two, it was fully the person.
On Trailblazers, we spotlight founders who succeed by doing things differently, not by following the playbook, but by rewriting it. Many of those unconventional builders and the VCs backing them run on Brex because it helps them scale with speed and focus. From smart corporate cards and high-yield banking to AI-powered expense management, Brex gives startups the financial stack they need from day one so they can spend more time building and less time managing back-office operations. More than 30,000 companies, from breakout startups like Anthropic and Cursor to global leaders like DoorDash and Plaid, trust Brex to help them spend smarter and move faster. That's why we, as a venture firm and also the podcast, run on Brex too. Sign up at brex.com/trailblazerspod to get started and claim exclusive rewards. That's brex.com/TRAILBLAZERSPOD. RocketReach is the leading sales and lead intelligence solution trusted by sales, marketing, recruiting, and business development teams to grow their businesses. Whether you're looking for a developer halfway around the world, a C-level executive in New York, or a potential investor in Silicon Valley, we connect you directly. With RocketReach, you can easily access the most comprehensive, accurate compilation of emails and phone numbers on Earth. That puts you in front of the right people faster and backs you up with a database that reaches across industries, markets, and titles, using AI to continually improve the quality of your contacts. With RocketReach, you can reach anyone so you can reach higher. Many of you know I love cold outreach. It's been the root of many of my success so far, and this is the tool that I've used the whole time. Trailblazer listeners get 15% off any plan at rocketreach.co/trailblazers. That's rocketreach.co/trailblazers. So you had this big exit, you take half. How do you maybe wish you had spent it? Maybe you're like a no regrets, I did it perfectly, but when you have that kind of exit, what do you wish you maybe spent it on differently? And was there anything that you realized, oh my God, I did not set this up right the first time? Because all of this ultimately led to your next business, which we'll talk about, but I want to hear like the mindset once that money came through.
So the first sort of aha moment was, I want to say maybe 6 months before the sale, I met with a legit team of like tax accountants, lawyers, all of that. And it blew my mind, the sort of structuring they were able to do. So the quick version is I'd never even heard of what QSBS is. Like it's this, qualified small business stock, but it's a crazy tax break that lets founders pay no taxes on $10 million when they sell their company. I didn't even know that was a thing, let alone that we were eligible. But what these accountants were able to do is they're able to set up other structures as well to multiply that exemption from 10 million first to 20, then 30 million. And you're looking at all this black magic happen, and you're like, if I had not had this conversation, I would have paid many millions of dollars in taxes more. So that's what first got my brain sort of ticking, and like, how many opportunities are there like this in our tax code where if you didn't have that one conversation, your outcome would be dramatically different. So from an exit perspective, I think the tax structuring piece was something I did well, but it was only because of having that conversation at the right time.
And who brought those people to you?
Some founder friend, I don't remember who, but it was at a dinner, was talking about how they missed out on this. They only found out afterwards, and it was a big pain. So that's when I just I cold emailed a bunch of people, like literally accountants, and I eventually worked with a big firm. And the funny part is now that I'm closer in understanding this world, they didn't even set it up perfectly. It was good enough, but there's a lot of, kind of nuances they messed up. But did that correctly with the exit structure. In terms of things I would do over, I think I underestimated myself in a lot of ways when it comes to like, these things are fundamentally a bit more simple than I first thought they would be. Just the general idea of like, you hire all these wealth managers and you think they'll do fancy stuff, but they're all kind of running pretty simple portfolios at the end of the day that if you feel comfortable, you can DIY quite a bit. But you live, you learn.
Yeah, I think a lot of people need to it gets them into action mode to trust people. and then once they educate themselves, they can not do it. Like the example I give is like personal trainers. Like when I was first starting to like really take my health seriously, got a personal trainer for 6 months, probably paid them way too much money. It's kind of bad. But then I'm like, okay, now I'm comfortable. Like I can go to a gym and feel like I can like lift stuff and do stuff. And then now I'm like, I don't need you anymore. Bye. Yeah. And I feel like financial advisors serve like a similar purpose, like educate you as much as possible. And then you really can do a lot of it yourself.
I think a great financial advisor, and I'll caveat what I think a great financial advisor is, could be worth a lot. But to me, a great financial advisor isn't just managing your investments. A great financial advisor is thinking about tax planning, estate, how to structure things. I think they can be worth a lot, but I would still push people once they get past a certain net worth to pay them a flat fee. I think when things get rough is when you're paying someone 1%, 1.5% just for very basic investment management. That's when it starts to feel like a pretty big ripoff. But if you find someone good and you're like, I'll pay you whatever, 5K, 10K a year, and you're doing the entire spectrum of your financial life, I think that can be very valuable.
I also love the like flat fee. Like this is a whole other conversation about the financial advisor model, but the percentage I don't love as much as the flat fee because incentives aren't aligned, and that's like the root of everything.
Yep. Absolutely. I think flat fee financial advice can work. I think even like a percentage can work as long as it's a lower number than what a lot of people have it set up as. But I think, I think the other mistake a lot of people make, including me, is at first when you are trying to invest, you try to find alpha from the investment side. Like you're trying to like beat the market, outperform. And while I think it's fine for you to do in the capacity as a VC manager, or for me to do for like some of my fund money, the majority of your portfolio, I think you're better off finding tax alpha, like saving money on taxes, and then just having more dollars to index the market with. That was one learning I had.
That's super interesting. So all these learnings you are having personally, and then at some point you're like, this should be a company. Tell me more about that moment, and tell me more about what Carry does.
Yeah, absolutely. So back to being 31, I sell Teachable. Teachable then also had started getting hard. Like we were closing in on 100 people, then 200 people. And I started to lose a lot of the fun I was having because it felt very corporate.
It was getting hard, not in the sense that the business was struggling, but in the sense that you were growing a lot.
And it just felt like I was spending my time doing stupid stuff. Like, we were in meetings all the time, talking to executives. It like didn't feel that fun. So by the time I left Teachable, had an exit, I'm like, I'm done. I don't want to do startups ever again. Like I'm burnt out. I'm exhausted. Like this has taken a lot out of me. But then I spent almost 2 years in between, just traveling the world, doing my own thing, getting into weird hobbies and sports and all of that stuff. But then nostalgia started hitting, where it's funny how your brain works. You forget all the hard things. You only start remembering all the good stuff, right? So all of a sudden I'm like, wow, running a startup, that used to be so fun, right? Like the early days, nothing like it. And I started to really miss that experience. My brain had forgotten all the painful parts, only remembered the good parts.
How far into this, like, I'm never doing startups again, did you have that realization?
This started happening about 15 to 18 months in.
Yeah.
And then at some point, it was the summer of 22, and I was getting to a decision point where I'm like, look, I need to I'm getting antsy. I want to do something. And I knew if I wanted to start something, it would be in this space. Like I was interested enough at that point. I was spending my time, effort, energy, investing, learning about personal finance. And then towards the end of the summer, I took the plunge where I decided to start, at the time it was called Ocho, then became Carry, with the general idea that there's so many opportunities in the tax code, primarily for business owners, but also for everyone. How can we build software that productizes it? So we started by building a one-person 401k plan, which is, in my opinion, probably the most tax-advantaged account in America, but then expanded to other products with the entire goal of how can we gamify the tax code, like make it this game and help people beat this game.
Yeah, and I feel like when you present anything as a game, people are like, I want to do it and I want to win it.
Absolutely. And I mean, that is my motivation as well, right? Like this whole thing is fun because it feels like you're hacking the system effectively.
Absolutely. What's been the most surprising thing you've learned since building Carry?
Compliance in fintech is painful. Like, there's this whatever meme going around, like we don't do this because it's easy, but because we thought it would be easy. And a lot of like fintech, I think, comes down to this, where while running an education company, you want to do something, you're cool, you go ahead and do it. Now we do something, we have to work with regulators, whether it's FINRA, whether it's SEC, whether it's our own chief compliance officer, we have a general counsel, things, and there's structural reasons for it. But I underestimated how much slower you have to go in order to eventually go faster.
Yeah, and I can only imagine, I mean, entrepreneurs, as a generalization, don't like being held back.
Correct.
So I would only imagine that is
Absolutely.
painful.
And I also like dove into the pain. Like, for instance, I've decided, we have a registered investment advisor. I decided to take my Series 65 and do that. We have a broker dealer. I took the SIE Series 7, Series 24, and I'm a supervisor in the broker dealer. So I'm also jumped into the regulated sides of the business.
And you're like, I'm going to take these tests, so I make the decisions.
Yeah, exactly. So and you do that, and then you realize, like, wow, like the systems in fintech are just completely different.
Yeah, I've seen that a lot firsthand, especially with evaluating. And I think when you talk to other VCs, it makes them hesitant to invest in fintech. What would you say to a VC that's like excited about the space but is hesitant about investing in it?
I think the advantage of fintech is like your challenges are different, whereby if we keep succeeding in acquiring customers, this business will do very, very well. Like the actual core underlying business, especially for a business like ours where you're accumulating assets, it's fundamentally a very, very good business, because if we, let's say, grow customers linearly, we double our customers every year, or even we grow 1x, what's happening is every single cohort comes back and puts in more dollars every year. So your graph of assets and revenue will keep growing non-linearly. It's fundamentally just a very, very good business. So if you get over the regulatory side, you can make a lot of money here. And obviously the big banks are proof of this.
Yeah.
But yeah, you have to find a founder who's willing to kind of put up with the fight.
Yeah. I think of like the Brex business model. Like it's crazy when you look at it. Like so much of what they do and a lot of the other fintechs in that space, they are just accumulating assets like crazy. And then you look at how much of the market they've gobbled up and it's like less
insane.
than 1%. Yeah. Like there's still so much to go.
It's insane. Like at Teachable, we had a different challenge where expansion revenue was tough. Like our cohorts grew, but they didn't keep growing fast enough. Here, acquisition is a bit harder, but the expansion on each cohort is very good. So it's different challenges.
Yeah, different challenges, same sector. I'd love to talk just a little bit about building distribution online. So you've done a really great job of sharing your journey, building enthusiasm for you as the founder. What's been your take, like whether it's with Teachable and Carrie or now just with Carrie, on like building online, building in public, and having sort of this big content arm of every business you build?
I'm a bit conflicted, to be honest, because on the one hand, it does drive us a lot of customers, but it also can be a bit of a distraction. So at Teachable, for instance, we were not very hypey on Twitter or anything. Towards the end, I got a bit of an audience, but our actual numbers were very good, but it was just not tech Twitter and where, people kind of hung out online. This time, as a second-time founder, built an audience around tax optimization, education, and it's been very helpful. But personally, I've reached a point where I'm trying to systematize as much of it since I still have a company to run. And while I think a lot of very successful companies and founders are now kind of investing more in founder brand, you also have the inverse of that, where you have people that actually have terrible companies but are super loud on social, and that's sort of the thing I'm trying to steer away from.
Yeah, we all know those people. Yeah. It's like, ooh, like they talk about their great AGM, they talk about their great quarterly reports. I'm like, ooh,
so it's a bit tough. However, as a channel, like if I just look at the math behind the channel, it works exceptionally well. Like from an acquisition perspective, it is far and away our best channel. And what we're trying to see as an organization is, can we scale this with other personalities within the company and not just the founder, even if it's 50% as much or whatever.
So this is actually a very interesting thing that I'm looking at a company now in this space. I won't say too much. How are you thinking about that, like employee advocacy and like employee-led content, employee-led branding? Like, is that something that you guys are going to invest in, or is it something that you're exploring?
And what we're going to do is not have the employee kind of build the company brand, but build their own brand, and the company will amplify it. I think a good example is like, and obviously they're a media company, but Morning Brew kind of does that with a lot of their people, right? They kind of build them up as mini personalities.
Yeah.
The downside of that is, as an organization, you lose that person, you kind of lose that brand. But people fundamentally want to listen to people. It's always going to sound better than listening to, a corporate personality.
I mean, there's the whole argument that like as AI slop goes everywhere and like people are bombarded with more and more stuff, the authenticity of like a human is going to shine.
And distribution will keep getting more and more important as it becomes easier and easier to like, just create stuff.
Okay, so Ankur's just proving my thesis true for the fund. I have a founder for you to meet, by the way, who I think could help you guys with that. If you work in venture or startups, you know the constant juggling act. Replying to messages from co-investors, founders, LPs, customers, and teammates all hitting your personal number. I know this very well. We all hand out our cell, which means your EA can't help an iMessage, and important threads get buried. That's why I'm very excited about Quo, formerly OpenPhone. It's built for founders and investors like us who want communication that feels personal but stays organized. Quo gives you a dedicated business line on your existing cell phone. And if you already have a business number, you can bring it with you for free. Plus, you'll get call summaries, transcripts, and an AI voice agent called Sona that can answer and schedule when you're offline. We're actually cooking up something fun with the Quo team right now and using that same voice AI tech in a new way for our firm. More soon, but it's a great reminder that you can use voice AI to stay top of mind of your customers' needs. Quo is trusted by over 90,000 businesses and rated .1 on G2 for customer satisfaction. You can get 20% off your first 3 months at quo.com/trailblazers. That's quo.com/trailblazers. I've actually used Gusto at 3 different companies, and every time it's been such a relief. It's simple, it's reliable, my paycheck was always on time, no drama. And unlike the big clunky payroll systems out there, Gusto is affordable and designed for teams like ours. Gusto is online payroll and benefits software built for small businesses. It's all-in-one, remote-friendly, and incredibly easy to use, so you can pay, hire, onboard, and support your team from anywhere. Try Gusto today at gusto.com/trailblazers and get 3 months free when you run your first payroll. That's 3 months of free payroll at gusto.com/trailblazers. One more time, gusto.com/trailblazers. Amazing. Okay, so we're going to get to some lightning round questions.
All right, let's do it.
Let's do it. Give me the first answer that comes to mind. If you want to expand on it, expand. Okay? Book in hand or podcast in ears?
Book in hand, always. I read 50 books a year.
Whoa.
And I have a spreadsheet of every book I've read since 2016. So yeah, book.
So you don't do Goodreads. You have like your own spreadsheet that you use to calculate everything.
Correct. My own spreadsheet. It has a rating, and I've been doing it since 2016, and I love it.
Wow. Okay, wait. What are the categories that you use?
So I started very ambitiously. I had all these columns, but
now
it's literally date started, date ended, book, and sometimes rating.
Love it. How do you keep up with the reading habit? I'm someone where I have a Kindle now, so that helps. Yep. Right before bed helps. What's your strategy?
Every single night before bed, and then you really do a lot whenever I do a lot when I'm traveling. So I would imagine 50+% actually, if like, because reading at night helps, but you get like 10-15 minutes.
Exactly. Yeah.
But then when I'm traveling, I'll never travel with a heavy bag. It'll always be a carry-on. But a disproportionate part of my luggage is physical books. Like I'll take 4 books on a 6-day trip somewhere, or like 6 books on an 8-day trip somewhere.
So interesting. Okay, great. Is there a certain genre of book that you like the most?
No, but I generally try and stay away from like Twitter book. Like I stay away from all the business stuff, and like if I'm reading, I want to just read random things.
Like fiction.
Yeah,
love it.
I would like 70% fiction, I would guess.
Wow, I'm jealous. I need to do more of that. Morning person or night owl?
Morning person, but not substantially so. My aura says I'm a late morning person. So yeah, I think my sweet spot is probably around now, like 10 a.m., 11 a.m. Like that's my sweet spot.
And when do you like to get up? Like a 7, 8 a.m. kind of thing?
Yeah, between 7 and 8, which is like normal morning, not like
you're
not
like very
one of the
normal.
5:45s. Yeah.
Yeah. I had I was talking to someone yesterday. She's like a 5 a.m. every single day. I'm like, no, not for me. Okay, cooking dinner or ordering in?
Cooking dinner.
What do you like to cook?
Probably like eat like some kind of protein with a little bit of other stuff, but like heavy meat stuff. Like I grill a lot. I have a backyard with a grill, which is pretty nice.
What's the best thing you make on the grill?
I just think steak. I just keep it simple. Like I think steak is like, it's something where there's so many different ways of doing it, but probably my biggest go-to.
Love it. There's nothing better than a good steak.
Yeah, absolutely.
I have my brother-in-law makes the most insane steak, and every time I see him, I bring up the steak because it's
What
that
does he do?
good.
What does he do?
Like I wish I could tell you. It's simple. Yeah. I think he literally just puts like some spices on it, salt, pepper, and maybe a couple other things. He may be listening to this and be like, Erica, it's a lot more than that. Yeah. I don't know, but it's the best steak I've ever had.
I was inspired in Argentina where the quality of their meat is so good. It's offensive to put anything but salt on it. Like there's literally nothing else.
That's so wild. That's when you know. Amazing. Okay, VC or bootstrapping?
It varies so much on the individual. I've made the choice of VC for both companies, but the way I like to use VC is like you almost try and approach it in a one and done kind of way, where you're not on the venture treadmill where you keep needing the next round, but can you get your business to somewhat break even within the first major institutional round, and then you just raise if you want to.
Which is the best.
Which is, teachable. We raised $12 million and had 9.5 in the bank when we sold 7 years later.
It's amazing when you don't have to dip, and it's just like there is like an optionality pool. If
Correct.
God
Because
forbid, the market changes.
otherwise what happens is you optimize towards the next funding round, which sometimes is the same as optimizing towards building a good business, but not always.
Yeah, and I think you don't know that until you're in it. And you're like, wow, these are trade-offs I'm going to have to make. Like, should I pump revenue or should I actually build something healthy?
Absolutely.
Networking dinner or big conference?
Smaller events to attend. To host, we host a big conference that is super fun. Like,
oh yeah,
but to
you just did it, right? Like a couple months ago.
We did it in May. Yeah, and we do this. We did it. We've done it for 2 years. Next year will be over 1,000 people. From a hosting perspective, the energy of a big stage is I like being up there is so fun. But as an attendee, the smaller events always.
Absolutely. What's the rationale behind doing the big event? I talk to a lot of people who are like, to do it or not to do it, because the big summit, conference, whatever you want to call it, is so much work. It's very hard to make. You don't really make money. You just sort of like break even. It's a big brand moment. What's the rationale there for you guys to do it?
Honestly, I wouldn't do it, and I couldn't do it without my partner, Andrew. He hosts a ton of events in New York.
Yeah.
And his team is very good at all of the logistics. So the way we split stuff up is all the things that would be difficult, his team does. So my role is to help get the speakers, present on stage, help the programming, curriculum, all of that, which is the fun stuff.
Yeah,
and I don't
you got a good job.
Yeah, I don't have to worry about the logistics.
So that's the secret. If you want to do this, find someone like Andrew.
Yeah, find someone that does all the logistics. And he, at this point, also hosts, I think 100 events a year or something. So it's gotten to a point where obviously this is a big lift for him, but they've kind of productized it internally.
Yeah, and everyone's probably seen him on Twitter. He's the party guy. Exactly. I think that's what he calls himself.
Yeah, he's a party guy who doesn't go to any parties anymore. So.
Yeah. Love it. Okay, hire slow or fire fast?
I think it depends on the stage of the business. One of my biggest mistakes has been hiring too slow, waiting for the perfect person. While I think I've now revised my opinion to believe that you're still going to get 1 in 4 to 1 in 5 hires wrong. So you may as well kind of move faster. So right now what I try and do is hire fast, but wherever possible, do some kind of work trial so it's not as brutal as like literally like firing people.
Absolutely. What do you think has been, if you can find a through line between the people that have been the wrong hires, what have you found has been the wrong?
The most interesting observation I've had is how hard to predict it is. So like from my perspective, I'm like, you may as well try more stuff because
shots on goal.
Yeah, exactly. You can do all these things to try and reduce your failure rate, or just accept the fact that you're going to get 1 in 5 wrong and just set yourself up to do it. Because there's people who interview really well who've worked out poorly, and there's all kinds of things.
There was like that guy Soham who was like all over the internet, who like you couldn't always predict that was someone who had like 3 other jobs.
Yeah, I will say from a work trial you can always tell. Like from that point on, your failure rate goes down to about 0% if you actually work with someone for a few weeks.
So if someone's listening to this and they're like, a work trial, I've never heard of that. Can you give them advice? They're like starting a company, they're hiring people. What does that look like?
Hire someone as a contractor for a few weeks or whatever, with the underlying assumption that there's some kind of mutual interest in them joining full time. By the way, for a lot of ambitious people, they want this as well because they're trying to validate if they actually want to work with you.
Yeah, because for the best hires, they want to make sure it's a fit back. They want to make sure culture's a fit, that they're actually excited about the product, that the numbers are what you say they are.
And a lot of these people have a ton of different options, right? So they want to be somewhere where it feels good.
Absolutely. I think people are worried about that, though. Mm-hmm. Like they're scared, that's going to shoo someone away.
Yeah.
10 small wins or 1 big moonshot?
1 big moonshot, right? Like I think, I think
you're in the business of compounding, though.
Yeah.
So I would have maybe expected the other.
Yeah, I guess when I hear that, what I think of is one of the things I hate is like when people have products that are relatively small, trying to A/B test their way to glory. Where I just think you don't have enough people, you don't have enough time. You're not going to be like changing button colors or whatever. You got to take big swings and you got to rely on your intuition and not data early on.
I think a lot of people need to hear that.
Yeah, I think a lot of people fall into this trap of like being like, we're data driven, and then just collect stupid data and like micro optimize.
Yeah. I think the optimize, not macro optimize, is like the root of it.
Yeah.
Being early or being right?
Being right. I think my entire career professionally has always been like, even it's why I'm not stressed about not being super on top of AI now. I think people underestimate how much time you actually have for stuff to happen. Like Facebook was relatively late, Google was relatively late. Like I think you're better off kind of letting things play out and then moving fast.
So you're like a third mover advantage, fourth mover advantage guy.
Exactly, yeah.
Cool. Never post on socials again or never fundraise another dollar again?
There's a very good chance if I was living a parallel life where I'm like, fuck it, I'm done, I'm not running a startup, I would like actually delete social media for many years. So.
But do you think you'd come back? Like building a startup, you came back?
I think look, there's elements that like I do believe it helps a lot from a company building perspective, but I don't think it's like joyful on a pure like this makes my soul happy to do this way.
I don't know that. Yeah, I've like ever heard someone say making content makes my soul happy,
exactly, yeah.
And if they are, they're like bullshitting.
Yeah, like social media is fine. I would live without it if not for work reasons.
Yeah. And I think the work actually makes you repel from it more instead of like engaging as you want. Yeah, I get it. Well, you already kind of hinted at this, so I think I know your answer. AI hype or AI fatigue?
I think, look, it is already changing everything. It will continue to change everything, but I think there's, like you look at the adoption curve, we're still at the high peak of inflated expectations where we'll get to the good place, but it's going to kind of go down and then come back up.
As it is with most innovative technology.
Exactly.
Yeah. This is nothing new. But everyone thinks it's something huge. And,
absolutely.
Yeah. How can people support you? Our listeners, if they want to learn more about you, if they want to learn more about Carey, where should they find you?
Yeah, absolutely. I think sillymoney.com is where I write a somewhat weekly newsletter when I remember to. Carey.com if they want to actually check out the platform. And I'm pretty active on most social media under my name.
Perfect. Awesome. And we'll link everything.
Yep.
Thanks for being here.
Yeah,
this was
thanks
fun.
for having me. This was great.
On Trailblazers, we're always talking about multiplying your impact, and that's exactly what Athena helps you do. Athena pairs you with a world-class executive assistant who becomes a true force multiplier for your business and your life. Working with my Athena assistant has been transformative. Gab was instrumental in raising Park Rangers Capital's fund in ways that I could have never imagined an assistant could contribute, from closing six-figure checks to identifying new LPs we should meet to matching my tone perfectly in follow-up emails. He's elevated my capacity as a founder by giving me more time to focus on the highest leverage work. Athena isn't just about scheduling meetings, it's about unlocking leverage. Hundreds of founders, investors, and executives trust Athena to free their time and scale their impact. Athena is offering our listeners $2,000 off for their first year of service and priority onboarding. And you want that, trust me, there's a very long wait list. When you're ready to multiply your impact and free up time for the things only you can do, go to athenago.me/Erica-Wenger. That's athenago.me/ERICA-WENGER. Thanks so much for listening to the Trailblazers podcast. If you enjoyed this conversation, be sure to follow the show so you never miss an episode. You can also support our work by sharing it with a friend or leaving a quick review. It helps more contrarian builders find us. For more on Park Rangers Capital and our community of elephant founders, head to parkrangerscap.com or find me online at Erica_Wenger. Until next time, keep trailblazing.